Markets have become desensitized to the circus in Washington, and that goes back 10 years since we've already had multiple shutdowns. Because the markets assume that, okay, we're shut down, but we're going to soon reopen. Now, if this drags on for months, maybe that we're talking about a different story. But since the average shutdown only lasts a few weeks, I think the market's under the assumption that this is going to be the same case, and that what's happening with China, what's happening with the Fed, far surpass in importance the nonsense with this shutdown.
Does this underscore, though, Ron, the potential contentiousness, the divisiveness that we're going to see down the pipe? I mean, coming this year.
I think that's assured.
Yeah.
I don't think that this is going to be anything less than a contentious relationship between Schumer, Pelosi / the president and his team over almost any issue, really. I mean, for them to be able even to agree on infrastructure would be remarkable, particularly since we don't really have the money at the moment to spend. Coming up with some sort of common ground there would be, I think, a stretch. I would agree with Peter. Listen, I mean, the Fed commentary, China easing, the upcoming trade talks between Washington and Beijing are probably more important. This, however, if Kevin Hassett, the White House chief economist, yesterday came out and said that every 2 weeks of shutdown costs 0.1% of GDP. When you start getting into months, that's a meaningful drag on growth going forward that will have to be made up later in the year.